At IBCanada Group, we are your complete and independent source on the infinite banking concept, serving Canadians from coast to coast.
Well, good day. This is Mike Sidhu from IBCanada Group, and I have a very special guest here with me today, friend and mortgage broker Bal Uppal from Bal Uppal Mortgages in beautiful Lower Mainland. How's it going, Bal?
I'm doing very well, thanks, Mike.
We're here talking about a little bit of the leftovers from the federal budget, which there has been a post about, but more importantly, earlier today, Tiff Macklem, Governor of the Bank of Canada, increased the overnight rate by 0.5%, going from a 0.5% to a full percent. Bal, tell me, as a mortgage broker, what are you thinking about this today?
So honestly, first of all, there's been a lot of opinions going from every end, but it's a false increase. And what I mean by that is we're not in an environment to be increasing interest rates at the time. I think it's a reactionary measure of what the market's been doing and other things, and I think it's a measure of how to pull back the reins fastest and quickest way possible. There's really no reason to worry about this. There's no reason for anyone to panic, because at the end of the day, what you have to look at, Mike, is that when people go into the mortgage world in the first place, there's a reason the stress test came along. The stress test came along, a few years back, and brokers and everyone was panicking. Why? Well, this is part of the reason. If you base a client's approval on 5.25% benchmark rate, which is called benchmark, versus 2%, we now have a good reasonability test of what the client will be able to handle between now and at that time. So really, at the point of view of economists or people, realtors or whatnot, saying things like, "Oh my gosh, if this happened, people can't afford anything." Well, no. People aren't supposed to be basing their affordability on the prime rate or variable, basing affordability on benchmark and overall living costs. As far as interest rates, variable going up, you probably want to step in and explain it even more. But at the end of the day, we're not in an environment that for it to keep going up. And if it does go up a little bit more, I do really see it coming back down, because the market's going to continue to soften. And we will probably see a drop in values in the double digits in BC for I don't want to call it a correction, because what are we correcting against? What are the two things we're correcting against? I think it's just a response of what should have happened versus the response of what happened in strange times. So I think it might continue to go up, but I think it will come back down again. If you want to add your piece to it now.
Yeah, well, certainly I think the Bank of Canada is in a bit of a pickle because the federal government from the budget last week, on the 13th, or sorry, the whatever day it was, I totally gapped on the day. I think it was the 7th that it came out, and really what they're looking to do is still continue to spend money. Now, historically, over the last certainly since the pandemic started in March 2020, 70% of the bonds issued by the federal government have been bought by the Bank of Canada. And certainly we've seen the Bank of Canada asset sheet just jump tremendously. It's gone up 10 times what it was pre-pandemic. So there's a bit of a pull here. There's a bit of a catch-22 where the Bank of Canada has an interest rate sensitivity that they're looking at before they increase interest rates. What they have to do is they have to sell off some of those assets. But at the same time, let's just say that they're going to continue to buy 70% of the government bonds. Well, that means 35 billion out of the 50 billion bonds are hypothetically going to be bought by the Bank of Canada. And so their sell rate, they're going to have to dump so much more assets in order to increase rates. Val, what have clients been kind of a little bit more, and maybe you could speak to this. I know I was in the Mortgage Professional Canada publication, the semi-annual State of the Housing Market, just published in March. they were saying that 37% of Canadian mortgages are coming due within the next 24 months, and 20% is coming due in this year, 2022. What are reflections on where people's heads are at, and where people might want to consider thinking in terms of their renewals or more?
Sure. Well, regardless if you're renewing or not, the variable product across all institutions, you can lock in anytime. So actually, I'm surprised my phone hasn't been blowing up as much as I thought it would be when the hike did happen. And I think it really comes across as when I first did the client's mortgage with them, the solid conversation that we had and the advice piece of what to do at that time if this does happen. The couple of clients that had messaged me and said, Bal, what do I do? Do I lock in or do I not? That's the question. Here's my thoughts. Right now, if you took a rate and you were sitting at 1.5 before the 2 hikes, you might be at like 2%. Okay. So if you're sitting at 2% and you said you want to lock in, you're locking into about 3.5% right now for a 5-year fix. Let's say there's a good rate going around 3.2. That's over 1% difference. Okay. If you have $1 million mortgage, you could do the math. The 1% adds up quite quickly.
Yeah.
And it's compounded. Yeah. It's compounded. So what I suggest to people to do, I said, if you're willing to increase your payment by $800 to $1,000 to, what it might ever be in the difference of locking in, why don't you simply go to your bank, talk to them about the whole double up concept and adding extra to your payment every single month as if it was already fixed. And then that way you increase the amount that's going on the principal, you're keeping the interest allocation the way it ends up as it goes up and down, right? And then you actually decrease your amortization as you pay your mortgage down. At the end of the day, what people fear is fear of loss. Right. Are we going to lose money? Are we going to lose our opportunity? Nobody's losing anything, and if, we're not talking about a 1.8 to a 4% hike here and maybe hopefully we lock in now, we're going to save ourselves. If you go ahead and just, ride the wave and watch it go up a little bit, which it probably will, ride the wave back down. And meanwhile, be aggressive on your payments. If you're questioning the fact that it might go up, then get ahead of yourself, get ahead of it, right? Don't, but if you're somebody who's going to lose sleep every time it goes up, go lock in, man, because you don't want to lose sleep either, right? And I don't want my phone blowing up every 5 minutes because you're worried.
Yeah.
So at the end of the day, peace of mind, and second of all, nothing to panic about. I think
that's really an interesting point that you bring up, is because there are, in financial planning, there are hard facts and there's soft facts.
Yeah.
Hard facts being the math, the logic, the reason behind decision making. Soft facts being, I'm kind of scared.
Yeah.
Hey, as a client to do that. And of course, with designing specially designed insurance contracts that can, have that capital in there when interest rates do go up. Well, we're going to see an increase in the returns in those policies because they're tied to loans, they're tied to lending. You're making money like a bank, right? So, it's been an interesting last few years with really loose monetary policy. And in my opinion, 1% is still really loose monetary policy. We talk about tightening, to your point, whether this is temporary or transitory increases, or whether this is going to be a permanent increase. Man, I remember getting my first RSP. This might date me a little bit, but I remember getting my first RSP, putting it in a GIC at 12.5%, 13%, right? So certainly there's a lot of older people that will remember the 1980s when their mortgages were a lot more than that. So we still live in very loose monetary times, in my opinion. So
when I purchased my first home, which was about 17 years ago, but date me too, so like 22, 23. When I purchased my first home, their interest rates were 4.2, 4.3%. Which with some people I'd be watching be like, I paid 17, 18%. Everyone has their story. But my point is, man, 2, 3, 4%, we're still laughing. What is free money? If you really think at the larger picture, are we really going to scoff over that a percentage of that low, as soon as you get over 4%, I'm like, okay, things might get a little more expensive. But everyone has their thought perspective, but I think we're still looking at money being normally practically free, how you want to put it, because of the fact the rates are still so low. And I think there's a lot of room, but there's nothing to worry about. I'll say even my personal end of things, pardon me, my mortgage is quite large and I kept it at variable and I'm not planning to change it. I'm okay with it.
Yeah. There's a lot to do with soft facts there. It's your comfort.
For sure. Those are all the soft facts in my brain. I tell myself every day.
Yeah. So listen, Bal, do you have any final thoughts that you want to say or share, or also shamelessly plug yourself? Where can people get a hold of you?
Sorry, I have a little bit of a cough. Pretty much people can get a hold of me. I'm in Central Surrey. I work the Lower Mainland. I'm doing this for 18 years. And you can get a hold of me at my email at bal@baluppalmortgages.ca or my phone number at 604-309-7412. And there's a lot of brokers out there. What differentiates me with everyone else is knowledge and being. I've been doing this for 18 years. I've been doing this for a long time. I know my stuff, and I'm not about getting the best commission for my work. I'm about making sure the client's taken care of and long-term advice and whatnot. So I'd be happy to help with any questions.
Awesome. Well, thank you very much for your time in this very impromptu meeting here today as we reflect on Tiff McClem's movements with the interest rates. Hey, for anybody looking for further information or any ideas on how you can set your money in a tax-exempt environment for you to compound your money for the rest of your life, go visit our resources at IBCanadagroup.ca, and look forward to seeing you again, Bal. I know you're heading out for a trip, so have a great day.
IB Canada Group, your independent authority for information on the infinite banking concept.